Welcome to the Risk Reversal Podcast. I am Dan Nathan. That is Gene Munster. He is the founder and managing partner of Deepwater Asset Management. Gene, welcome back to the podcast.
Hello, Dan.
We got a lot to talk about. All right. So we have Nvidia next week, the earnings. We're going to kind of preview that a little bit. We'll talk about SoftBank and what it means, if anything, them closing out their position in Nvidia. I want to do a Q3 earnings wrap for the Mag 7, talk about some other names that just joined the AI party over the last few months or so. But let's start with Q3 earnings, Gene, like coming out of it. I know that there was some dispersion, if you will, about the price action after many of them. I don't think there were many like that were too disappointing, but like Microsoft and Meta have barely seen an uptick over the last couple of weeks. I think it's clear based on what we saw out of Meta that was probably the most controversial. But let's start with Microsoft, because Microsoft did something very interesting. Going back to, let's just call it the calendar Q2, 3.5 months ago or so, the stock gapped up to a new all-time high. It was up 8% the day after results. It closed that day on the low of the day, and then for the next 2 weeks just found itself going lower. So there was just this insatiable selling that we saw. It did something very similar, ran into this quarter a few weeks ago and opened up at the all-time highs, which was actually a matched high from 3 months earlier, and then has barely seen an uptick over the last, let's call it, 2 weeks or so. What's going on there? Because I think you would probably tell me that as far as all of the Mag 7, this is one that's going to be easily trackable as the most consistent demand for AI technology and how it's infused into existing suite of services, but also co-pilots and agents and the like.
Yeah, at the most basic level, what's going on is it's related obviously to Azure, a lot of the stock performance, and they had a great Azure number. They beat the top end was a couple percent higher in terms of the growth rate than what the street was expecting, the highest of all of the hyperscalers in terms of all the cloud providers on growth. And I think that what the bigger picture, that's why the stock trades. It traded up into the quarter in anticipation of a strong Azure number. It traded off, I think, in large part because there's a narrative around Microsoft, which is like, what's the really breakout, exciting part of this story? And when you think about the trade-off between consistency, like you talked about, one of the most consistent players here, I mean, their growth rate has been lockstep steady, 10% growth pretty much for as long as I can remember, for many years. And so kind of can inch up to 14%, but it's kind of been in that range. And I think that if you look at the broader AI trade, investors are looking for more like dynamic surprise. You mentioned kind of a new group coming to this AI trade around the memory side. Like that's an example of a space that was generally thought to be for dead and has shown that there's new growth opportunities around it. Microsoft doesn't have that kind of dynamic upside. Azure is obviously a golden star for them, but beyond that, and then we kind of follow through, the bouncing ball follows through to what happens with OpenAI. And, they've got, call it a quarter of value. They own about a quarter of OpenAI. If that comes out at $1 trillion, it's $250 billion in the context of where Microsoft's at. It's still, it's material, but it's still not something that's going to create this dynamic upside. So those are the reasons why I think it's good, but not great. I would kind of at its most basic level.
Yeah, it's interesting, though, from a growth standpoint, you have expected earnings growth for the next couple of years of 17%, expected sales growth of 15%. You have a 68 or so gross margin. I mean, the stock trades at 32 times, this fiscal 2026, and then next year, fiscal 2027 at 27 times. It actually seems like for the first time in a while, the most reasonable relative to growth multiple, and so, and we'll talk about Alphabet and we'll talk about Meta and the like, but this is one that I just find interesting. I mean, I think the lower it goes, is going to, more interesting into 2026, but it having nothing really to do with valuation. And we can talk about valuation after, we get through some of these names. Okay. So Meta was obviously the most controversial. Meta was the one, I have to think that their management knew, whatever the wording was, I can't remember, but like something like their spend was going to be materially higher or something like that. They kind of said over the next, 3 years, it might be between 500 and 600 billion dollars in capex, which would be a meaningful, step up. How were you thinking about it into the quarter and on the way out? And do you think that the sell-off was an overreaction?
So going into the quarter, I was thinking that they're going to keep doing what they've been doing for the last couple of years. Since if we kind of roll the clock back, it was January of 2023. So we're coming up on 3 years when Zuck first talked about the year of efficiency. And what they did shortly after is started to grow revenue materially faster than earnings. And as I went into the print, I was expecting it to be strong, but that commentary about materially growing expenses faster than revenue for next year caught my attention because they had been one of the most aggressive spenders. And the way that expenses work is the CapEx piece has a depreciation element to it that reaches expenses. So that does play into that expense equation. And they had been doing, despite spending a lot on CapEx, they still had been growing revenue materially faster than earnings. If in the 8 quarters before that, the average revenue growth was around 20% and average expense growth was around 10%. And so now you have a scenario here where we could be seeing. So that's what I was expecting going in, and I was as surprised as everybody. Your key question here is like, is this ultimately an overreaction? And I think that it's an opportunity. I think it has created an opportunity. We still own it at Deepwater. Our belief is that what they're doing will yield a return. We think that what they have been doing has been probably the best example of a return on investment in AI, and specifically around their advertising growth and the engagement growth. I just want to quickly focus because this debate at the core of should you not invest, should you not invest in Meta is a question about, do you think that they're good stewards of capital and will they ultimately drive value profitability from this AI investment? And I just want to look at one angle towards that, which is the engagement piece. So their daily active users was up basically 7.5%. And if you look over the last 6 quarters, the growth rate has increased. It was 4.5% 6 quarters ago. So now, at first blush, that doesn't seem like much, going from 4.5% DAU growth to 7.5%. But when you put it in the context that 40+% of the world's population uses one of those products daily, I mean, this is the mother of large numbers, the law of large numbers. It's an incredibly difficult number to grow, and they're accelerating. And I think it is because they're getting smarter with AI about doing engagement, getting people hooked into using these products, coming back more often. And I think it is an example. So when I put it all together, Dan, I think that the script got flipped on me, on investors. We have to live with a reality around the expense revenue dynamic for the next year, 2 years, but it will, I think, flip back well before then. The psychology will flip back, and I think you're going to see another move higher in the stock.
Well, it's interesting to me that, obviously all that hiring and they're going out and they're doing like NBA style contracts, right, for talent. And, there's been, I have to think that there's been some disruption in the locker room, right? If you think about all the reorgs that they've had as far as AI, if you think about Llama, and, a lot of folks, say this is a great model. It's open source. There's, that's a big differentiator between some of the LLMs that some of their competitors are building, but it really feels like they are in the backseat as it relates to what's going on with OpenAI and Google. And we'll talk about Google. I mean, the change in sentiment there is pretty fascinating. But Jan LeCun, their head of AI, is leaving. It looks like it was probably a bit of a push out. They've moved a lot of people around there, and I would suspect they're going to lose a lot of AI talent that's been there just because of some of these deals that they've done to bring people in. But how do you think about Llama as an open source model? Because we keep reading about, and Deirdre Bosa and I were talking about this the other day on the pod, these Chinese open source models that these companies are not spending, whether it's Tencent or ByteDance or Baidu or Alibaba, they are not spending hundreds of billions of dollars, right, to build these models, and they're pushing them out there. And yeah, the cost of compute is higher, the way that they're kind of built these clusters, but Like, is that enough? You know what I mean? Like, and so I just wonder whether our companies are just kind of getting way over their skis, 25, 30% of their revenue to do something that, and you and I were chatting about this on text the other day, they're all going after the same thing. Once they all get there, there's not going to be that much differentiation, right? They're all going to build products on top of AGI or super intelligence or whatever. And I'm just not sure it's a winner take all the way it was for, let's say, Google or Meta. Like, thoughts on that?
Maybe starting from the beginning is related to Llama. Like, what is the state of Llama? How good is it? The answer is that if you kind of rank the big models out there, it's number 5 out of 5, 5 of the big ones. So it's well behind. So State of the Union, it is struggling. And therefore enter what Zuckerberg started doing kind of in the spring and the early summer in terms of bringing all this talent in. And it may be worthwhile just to take a minute and go kind of below the surface. We see the headlines, see about people leaving, see and hear about these big contracts. And these people, with options and signing bonuses can make $50, $100 million a year. I mean, these are very big hires. I think one dynamic is, like you said, this is disruption. These are people who are the top of their field, and some of them work well with other people, and sometimes people at the top of their field don't particularly work well with other people. And there is going to be this hashing out, I think, of the culture in their superintelligence lab. But eventually, I think this is below the part below the surface. Eventually, yes, we're going to see these headlines, but talent is really important. That's one piece to it, but also like the intensity around culture. And it feels like from 3 years ago, Zuckerberg is a different person, and he has there is like a competitive fire. You can almost look at his language on the investor calls from the past 3 years, how it's gotten almost like more combative, more confident, confrontational with other companies. It's like it seems to like line up with his, I don't know if it's jujitsu or what kind of his martial arts that he's training for, but it's like this different person. And the reason why, as silly as that sounds, the reason why it matters is you have somebody who is competitive and has his eyes on a prize, super intelligence, and you are bringing in great talent. And I mean, there's probably some sports analogy in there somewhere, but I think it's going to yield. There will be a yield. And as I mentioned, the State of the Union of Llama is in a rough place, but I think it's going to make big improvements. The second part of the conversation just related to, like, what does this mean longer term? And we think a lot about this. And internally, we debate it. Like, is this just a race to the bottom? And just a couple kind of guideposts to that. So this is the basic idea, like you're mentioning, is we've got, call it 5 companies that are going after general intelligence or super intelligence or some flavor of it, but to make the models much more useful at its most basic level. And if they all get there, like, is this going to be a race to the bottom in terms of the pricing of the tokens? And that's where they're going to get paid, or the pricing on consumer subscriptions. So on the token side is that there is that risk that as these models come out, I think there will be needs for multiple models because there's multiple personalities that people want to build on top of, just like multiple models. But one thing that we believe is that if utility is there, if there is value, which there should be, that these companies are going to look around and say, we're not going to play the game of the race to the bottom. It would be silly for all the investment that they've made. These hundreds, it will be probably collectively $1 trillion of investment to get to AGI, for them just to pound each other into the sand. I think that there's going to actually be a flattening or maybe even an increasing in token prices as effectively these companies get hooked on the drug. Now, we saw the same thing. We went back and looked at on the consumer side, getting hooked on it, on consumer content. We recently looked at 10 different this is everything from Siri to Netflix to Apple and some of their different pricing, Spotify. And what we found was that the prices typically start low and then they ramp up. And on average, it ramps up a couple percent faster than inflation per year. And so there was that same narrative around content. This is a race to the bottom. Content's content. It's at some level, you can only have so much time to watch. But what we've observed on that, whether you can apply it or not, has suggested that once there's scarcity and people get hooked to it, then they start moving up prices. And we think the same thing long term will happen around the models.
Yeah. So, what do you make of Meta spending, let's say, more than Amazon, more than Google, more than Microsoft, right? And all of those have the lever to pull that they have this cloud business, and the cloud businesses seem to be accelerating, which is one of the reasons why Amazon just broke out to a new high. It's one of the main support levels for what's going on with Microsoft, despite its recent weakness, right? Google Cloud. When you think about, and I know that you've been on this train for a while. I mean, Google is emerging as one of the ones that has the most levers to take advantage of the investment that they've made. How does that shake out for Meta if all this spend is just to serve better ads or increase engagement? And I get it. They have, like most of the world on their products, but they've already shown some benefits of using this technology for our, ad targeting. And you just mentioned the uptick in engagement. But doesn't it look like a very different sort of setup than the other three I just mentioned?
Definitely, it's a different setup. There's more risk, more reward to what Zuckerberg's doing, and specifically is that we still haven't really heard the master plan around what's going to happen with Llama. And he's talked about intelligence. He's talked about the need for super intelligence to create personalized AI, which is suggesting that he's going to kind of layer it into their different social graphs that they have. And that really isn't as compelling as creating a model which you can sell a consumer subscription to, or you can sell tokens to. And so the bottom line is that my sense is that his long-term vision for Llama is that they want to actually break it out. Right now it's open source, but I think that they will they can keep it open source. Red Hat's done this, keep things open source, but find ways to make money around it. Maybe kind of a white glove version of Llama. It would just seem, I think, given how strong his vision is and how impactful this is, it would seem like he's missing the mark if in fact he creates this level of intelligence to kind of keep it within his network. So that's a pretty bold prediction to say that they're going to start to monetize Llama directly. I think if you're going to put that in a probability scale and ask 100 investors, probably less than 15 would say that that's on the cards. But I think that probably is on the cards, because I think that those are the types of things that they need to do to justify the levels of investment. Because Meta is, like you said, if you just kind of rank them, who's spending the most, Meta's right there at the top, and they don't have a dedicated, as you mentioned, cloud product.
All right, so let's talk Amazon, because it's almost flip-flopped in a way. They had this reacceleration in AWS. The street obviously liked that, but they don't have their own models. And yeah, I know that they're working on some smaller ones, right? And they have this investment in Anthropic and this partnership and the like. But does that bother you in some ways that they've spent their tens of billions of dollars and continue to spend on kind of, the infrastructure as it relates to AWS and being able to kind of host all these other models? Just curious how you think about that. And do we even care anymore about the retail business? Obviously, we care about advertising, and that this technology might help them a great deal, but they're also being disintermediated by, let's say, Shopify, which, and agents. And, we saw some of this over the last couple, weeks or so, some of this discussion. I'm just curious, like, how you think of Amazon right here.
So, one of the learnings that I've had over the years is that when things become habit, they're really hard to break. And we saw that with Google search. And, if we rewind 6 months ago, I was negative on Google. I was very negative on it. I changed my tune when I saw the June results and saw that they were doing better in terms of their click-through rates than what I had expected. But my point is, if you look at anything from Google to or Microsoft, kind of some of their dark days, to what's happened with the iPhone, it's the same with Amazon. I mean, you've got basically every household's a Prime user. And that's really powerful. I mean, this for the US, call that 40% of their business. That's powerful because when you go to shop, when you're in Prime, you think about Prime first. And so I think that piece is a safe piece. The retail piece is safe for them. And then, of course, they're starting to claw back a little bit in terms of the growth rate. They're still losing share in cloud, but that's still a growth business because they're supply constrained. The growth numbers should be higher. I think that the bigger story around Amazon is going to be around profitability. And we've seen margins go up. I think their operating margins were around 12%. And I forget what they were over the last few years, but if even going back to 2019, because then everything just got thrown into, especially for Amazon on the margin side in 20 through 23. But they've been just steadily improving. And part of that is AWS because it has higher margins. But part of it is improving what's going on in retail. And, they've talked about the million robots that they've got. They have about 1.5 million people working in their fulfillment centers globally and delivery networks. But you're going to see more of, I think, a focus in the years to come. It's not on, we don't own Amazon, but that's just the narrative around it is, can they continue effectively to use AI to improve AWS growth and then separately improve the margins?
Yeah, and it's interesting because Amazon investors, just as they've done with Google over the last, let's call it, couple months, they've kind of, sentiment has turned. Let's talk about Google really quickly, because this is one, it went from being really, in the penalty box, I want to say, for most of 24 into 25. And then, Gemini has been one of these things that people come around to where they're like, listen, this works across, many of their consumer facing products and then across their productivity suite. And obviously, what we're using now is the worst version of that, right? And so slow and steady, is kind of winning the race over here. You also saw, good cloud growth in GCP. Where does this stack up as far as some of these other names that we just mentioned? And I know this is one that you've really liked over the last year or so.
So we own it. I'd say it's kind of, in terms of my ranking over the next, at least with the Mag 7, over the next 6 months, it's number 2. The quick takeaway is what's happened is that generative AI has starting to turn a light on for people that they can find out more information. And when they think about finding information, they go to Google. And so their amount of queries has gone up nicely. And then they're kind of stumbling into ways to monetize that through AI overviews and AI mode and still throwing ads on the traditional search results. So the big picture is that we've seen an acceleration in growth of search. It's right around, I think last quarter was like 14%. It was like a rocket ship, up from like 11 in the previous quarter. That's probably not sustainable at 14, but if it can kind of keep it in that 12, right around 12%, I think that's going to be, relative, the valuation's kind of now in line with the rest of the group. It's going to be a steady company. And as far as what to expect going forward, they've talked about these 3, they refer to them as surfaces. So a surface would be AI overviews, AI mode, and traditional search, and finding a new way to kind of bring them together. So I'm curious in the next couple of years of how they're going to pull all that together into something that's even more compelling, but still at a crossroads, but in a good place.
Man, the stock is so extended from a technical perspective. It's basically 50% above its 200-day moving average. I mean, which is fairly astounding. And when you have this sort of steep rise in such a short period of time, usually you'll have a bit of a check back. Apple. And I got to go back to June 24. You were very clear after WWDC. You thought that Apple Intelligence was going to be transformative for the Apple ecosystem. It took a while for people to kind of see it, despite a lot of, speed bumps along the way, right? But now you look back and you say, hey, these guys have not been spending the tens, if not hundreds of billions of dollars. Eventually, they just did this deal with Google to, license,
Chump
I guess.
change.
Yeah, I mean, it was $1 billion, and Google pays them $20 billion for exclusive search on Safari. Looks like a great deal. So the stock, you don't even need a super cycle of an upgrade right now. You know what I mean? You can start looking a year ahead and say, what does this mean for their services, which, is kind of stuck in the mud, has not been growing. I know it saw a little bit of an uptick, but obviously the mix shift there is great for them. How are you thinking about that? Because it's obviously had a big run of late, and you can't really put your finger on, other than iPhone being better than expected, right? Worse in China, though. To me, it seems like a pretty right down the middle sort of quarter, but investors are kind of been piling in over the last few weeks.
So this is the one I think is going to be the best performer of the Mag 7 over the next 6 months. And I'm for sure in the minority on that, just because it trades at a high multiple relative to its growth rate. Doesn't seem to line up with reality. I think sometimes what is reality and what should happen doesn't happen. And that's essentially what I'm predicting. And specifically around the new Siri. And they've set the bar really high, and they've messed up before. And this is just a read on culture, a read on Cook, and read on what they need to do. They've said that it's going to be out next year. And that, again, we're getting for when we talk about Siri, I mean, that's what part of the thing that's going to get updated, but it really speaks to a whole new use case, basically a breakout way for an Apple Intelligence that actually works, maybe said in a different way. So my sense is that the iPhone is going to continue to do well, not because the form factors are particularly great. I think they're just reaping that benefit from 21, where we had almost 40% iPhone growth. I mean, people come back, and they're seeing those upgrades. We saw the improvement in the June quarter. The June quarter should not have been a better than expected quarter for the iPhone, and it was. And September was a little disappointing, and then that got pushed into December, so it's a little bit better. But I think when you put all this together, my simple takeaway is that I think the AI bar is low. Apple's been pounding the table. It's going to be great. If they miss, if they come out and series of disappointment, stocks going up probably by a lot, goes down by 20% on something like that. And then actually I think it starts to climb back, because there's for another time, I'd love to join and talk about what's going on the wearable side. And I just think that like Apple's consumers aren't going anywhere. If they blow it on this next series, most people would just be like, give me my next iPhone. I need my new Apple TV every 10 years, and give me new AirPods. I don't lose them every 6 weeks. So I think they're going to stick around. I think they're going to get another chance to get it right. Again, I think the stock will be devastated in the near term on that, but I think it's just going to climb right back because they're still in a great place.
You know, it's interesting. I bought the iPhone Air, and my wife got one too. And I read this yesterday that 3% of iPhone sales in September were the iPhone Air. And so I looked at my wife and I said, "Oh, we're the two people that bought it." And you know, rarely do you see that sort of miss. I think it's an amazing piece of hardware.
That's funny. That's good to hear.
I thought it was one of the coolest upgrades to the iPhone. I want to say literally since, I know this sounds crazy, since iPhone 10, which was like 8 years ago.
I think that's
something
right.
Like that.
I agree.
It's a beautiful piece of hardware, and it works pretty well. I think the camera is something that people have an issue with. But okay, let's talk. I want to do Nvidia, but before that, I want to talk about how this trade's broadened out a little bit. We just mentioned the Mag 7. Tesla's up 8.5% on the year. Apple's up 10% on the year. Amazon's up 13% on the year. Meta's up 7% on the year. Most of the Mag 7 are underperforming the S&P and the NASDAQ. But of late, and I just want to kind of rip these off here, because if you look at memory and storage, I mean, SanDisk is up 900% from its April lows, storage company. STX, that's Seagate, is up 350% from its April lows. Western Digital up 500% from its April lows. Celestica, contract manufacturer, a lot of concentration, Alphabet and Amazon, nearly 50% of their sales, up 500%. What the hell is going on here? Because, I mean, it just seems like one of the oddest things I've seen in tech in the last 20 years or so.
You get the part of the spring back is look at what pushed the spring down. And we had this concern about the need for memory, for DRAM, for advanced RAM. And specifically is that if you looked at what some of their margins, what these companies had predicted, if we rewind a year ago, they're predicting margin depression, which like the trading on these stocks has been, if you look over the last 15 years, there's just like a playbook that investors look at. You own them when margins are going up and capacity is going up, and you sell them when they're going down. It's just very basic. What's happened is, I think there is, as during that same period, we had this step function up in terms of how much investment is going to be made into the broader AI build out. And I think what investors have recognized is that even though that we didn't see it initially in some of those companies' commentaries a year ago, that they're going to be direct beneficiaries, whether it's through working with, selling alongside Nvidia, Blackwell, and eventually Rubin, or alongside AMD and some of their GPUs, or custom silicon, because you need RAM for custom silicon too. So there's been this, I think, kind of a resurgence in this. We have a ETF, ticker's LOUP, but we invest in frontier tech below 500 billion. So we've been orbiting around this trade for the last few months, and effectively, it's just that there's been a step up and a greater confidence in their outlook. Important to note that their stock prices have gone up by a lot. the outlook on these companies have gone up modestly. So this has been more on the multiple expansion side because investors are just more confident that they're not going to have that margin depression that around the corner.
Yeah, I mean, but these are also very cyclical names, right? So
Right.
if the prices run ahead, I mean, all three, SanDisk, Western Dig, Seagate, they all have about 10, $11 billion in sales. They've all just gained, tens of billions of dollars in market cap in a very short time. So the market investors are pricing those revenues or that revenue growth like that. It's all about the revenue growth, right? From
Right.
here, and they put like a crazy multiple. These are all stocks that usually trade at like 2 times sales.
Yeah.
Now they trade at 5 times sales, and that's obviously that multiple expansion is anticipating something that we really haven't seen on these names at this scale in a
Yeah.
very long time.
I mean, maybe I don't want to get into specific names, but
Yeah.
I can tell you recently we have sold some of those companies.
Okay. Yeah. Fair enough. All right. Last thing, Gene, I know you got to get out of here, and I really appreciate your time as usual. Nvidia reports on the 19th. This is Wednesday after the close. Implied move about 8%. The stock has not been a big mover the day after earnings, and maybe like folks who are invested long term, they don't care about that. For me, what I care about that is really sentiment. You know what I mean, and really, that delta between where the street is and where they guide to. But then obviously you've seen a lot of investors, kind of ratchet up above their guide, right? Because I think the company's done a good job of being, cautiously optimistic, right, in many ways, especially now that you have custom silicon, you have AMD in there. AMD just got this huge order from OpenAI. They're probably taking all of this very seriously. You also, going back a few quarters, were saying that the street was way too low, and we've seen earnings and sales estimates go up fairly dramatically from like a 42, 43% to above 50%. That's for the current fiscal year. And then for next year, I think 35, 40% expected growth.
I checked it yesterday. Yeah. 39. But
yeah, but and it's moving higher. Okay, so how are you thinking about the quarter, and then just broadening out a little bit? We know that SoftBank, sold their stake. I don't know if that really matters. The stock was down, on Tuesday a little bit on that, but the bloom seems off the rose, at least in the names that got us here, the Mag 7, and now, like we just said, it's broadening out a little bit. How important is this Nvidia report in the guide? And I'm just curious, like whether you still own it and how you're thinking about it going forward.
we still own it. I'd put it in the kind of ranking of the bigger companies, number 3, Apple, Google, Nvidia. This setup it's a mind bender, and it's a 3D chess mind bender. I don't know what the right analogy is, but rewind to October 28th. Jensen at GTC DC, their conference in Washington DC, gets up and throws up a slide that says they expect $500 billion in cumulative Rubin and Blackwell revenue through the end of calendar 26. And you can back into, at that time when he made that comment, it suggested, and by the way, that included no China revenue and also no additional bookings. Now that's what they're expecting for revenue. Now they have to fulfill that. They got to supply it. There's supply constraints. But if you just say they're going to be able to supply that, it would imply 15% upside to the street numbers on October 28th. Now, since then, numbers have come up by 4%. There are 60 analysts on the stock. Not all 60 have raised their numbers. Of the analysts that have raised their numbers, they've gone up by about 6%. So they've gone up below what Jensen had said. So that gap there is still, are they going to be able to produce enough? Kind of some of that question. So that was like, I would refer to it as a euphoric slide. As an Nvidia investor, I probably looked at that slide a dozen times to make sure I was reading it right. And then we fast forward to Meta's comments about the flipping of the script, expenses going faster than revenue, and then all of a sudden there's this surge in investor concern about overinvestment. And then you have SoftBank selling their Nvidia shares. And the reason why this setup is different is that in theory there's a catch-22 going on this. If Nvidia raises numbers, which I think they do, the street's at 39% revenue growth for calendar 26. I think it's going to shake out somewhere around 45% after their call. But they've kind of already guided up from the comments at GTC. But there's also that piece of how are investors, I don't know the answer to this, how are they going to respond to higher capex? Like, is this just going to throw concern on the new narrative that there's an overinvestment in AI, and just kind of pressure all of the AI trade? Like, we told you so. Like, this is what's wrong with AI is Nvidia. Or is it going to be viewed as like, this is just simply growing faster for longer? And so, I mean, it's a different setup, and I'm probably overthinking it. I think at the most basic level, if they raise, it's probably good. And I think that there's a high probability that they raise, even though they've already telegraphed that. I think it would be reassuring for them to hear that they can raise numbers without having any China. And so we're still positive. We're not trying to trade around the quarter going into it. Holding my breath going into the quarter. Still feel this is going to grow much faster for much longer.
Yeah. 2 data points, though. So Microsoft CEO Satya Nadella on the Brad Gerstner podcast with Sam Altman, he said, we are power constrained. We have chips that are lying around, and we can't use them despite, strong demand because we can't access the power. I think this is obviously going to be something that's going to be very important as we go into the new year. And then the other one is CoreWeave. In the quarter that they reported, their CEO is saying, we have no problem accessing power. And when you think about it, Microsoft is probably 60% of their revenues. That's not a good place to be when one of your biggest customers is saying one thing and you're saying the other. And, at the end of the day, CoreWeave is going to be the first one to lose these contracts, these cloud contracts. So just curious how you think of that. And then, I mean, this is controversial in my opinion. And we're getting to a point where, we're starting to see the sentiment just turn a little bit. And that's why this NVIDIA quarter is so important.
I think it's turned, I would say more than a little bit. I don't want to be dramatic about it, but I think it's turned a little bit more given, again, that the outlook from NVIDIA. And since then, since October 28th, like Jensen is a man on the move, and he's making comments every day, and they're the same comments.
Yeah.
We can't keep up.
I don't like it though. I just think talk softly and carry a big stick,
they're gonna high probability. So the reason why I mentioned that is there's really not much we're going to learn on this call. They're going to raise guidance. We know that. He's been saying that.
Yeah.
And I think what I'm going to learn is how that what in this new environment. I do think that the environment has turned. I think that if you just take it, if those comments were a year ago, the stock would just be running.
Right.
And it's not happening because people don't know. Like, you got about as big of an AI bull as you can find in me here. And I don't know what the reaction is going to be.
Yeah. Yeah. All right, Gene Munster, I really appreciate that Q3 earnings wrap for the Mag 7. I hope you'll come back and we'll talk about NVIDIA and what it means for the rest of the ecosystem. And obviously, really how investors take what is expected to be a good report and a guide higher. So, Gene, I really appreciate you being here. Let's do it again really soon.
Sounds great. Bye for now.
Thanks.